Schedule G is for recording the transactions on the client's portal with the ATO. This schedule is divided into the various categories that you're most likely to encounter on the portal, including GST, if the fund had a commercial property, for example, pay-as-you-go withholding, if it has to withhold tax from taxable pensions. Most likely one is pay-as-you-go instalments. It's unlikely to be an EFBT deferred. There may be some penalties or interest payable or earned. You can see I've pre-filled this schedule already, and they had an instalment unpaid at the end of the previous year. The top section here is the previous year, where you record any overs and unders outstanding from the previous year, and then any payments made of those amounts outstanding. You can see the way I've completed this is they have an instalment outstanding of $500 in the previous year, which has been paid. So there's no discrepancy on the top line. If they hadn't have paid that full amount, and I've just changed the figure here, you can see that an error will throw out showing that they haven't paid all those taxes outstanding, and it will still form part of the outstanding tax at the end of the current year. But let's assume that they did in fact pay all the previous year, which is most likely since they've made payments this year. And we've recorded both the IAS assessments of the amounts each quarter that they've actually assessed and that the ATO has processed. So these figures will agree with, will come from the ATO portal. The fourth quarter here may or may not have been paid, but it certainly will be. It's recorded here if it has been lodged and assessed by the ATO. Not necessarily before the end of the year, but at any time, before or after the end of the year. Over the other side here, on the right-hand side, you can see that this is for a separate column. If the left-hand side of the schedule is all for taxes assessed, the right-hand side is for taxes paid. Taxes paid, taxes assessed. Taxes paid, you can see, are not always the same as taxes assessed. And the client in this case has been rather slow and sloppy in paying their tax, so they have amounts unpaid back to the start of the year, or their payments don't correspond to their assessments. And you can see they've made several payments, but they're not necessarily agreeing with the assessments. And this means that by the end of the year, the total tax paid, $2,500, does not agree with the tax assessed of $6,800. And you have the opportunity to record and analyse the payments by the type of tax that's being paid. You can see that they've only paid $2,500, and I've allocated $2,000 of that to the pay-as-you-go instalments. The other item that they have is interest assessed, and I haven't allocated any payments against that. Consequently, we have an error of $500 because the tax paid is $2,500, the tax allocated is only $2,000. I'm therefore obliged to nominate which types of tax I am paying. This dissection may not occur in the ATO portal's records, but we make it in the accounts so that we can keep separate accounts and keep track of the GST and other taxes as we go. So we have to allocate another $200 to this to the instalments here to correctly allocate all the tax that has been paid. So there should be no error apparent there, no red warnings there. The tax paid should agree with the tax allocated across here, and the amounts assessed up here will add up and be totaled over here. There's only one other thing to do on this schedule, and that is to make sure that these checks have been done, that the penalties in fact have been recognised, or interest penalties has been recognised and posted into the accounts, and there's a check to make sure that that's been done. The other smart checks are no longer in the later versions of the work progress. You have now detailed all the transactions on the ATO portal and are ready to process that information in other places.